The issue is that you start seeing companies closing, defaults. There's some contagion there, and they start getting laid off these companies. Unemployment starts to rise. You go into a recession, yet prices are still going up. It's awful. Investors will flee to things like gold, and I think they would flee to things like Bitcoin because you still have inflation rates rising. Now we're running such high deficits, fiscal deficits, and you get into recession, it just makes the deficits wider. The whole world, it's not just the US. I mean, our whole foundation is built on borrowing, leverage, and debt. And so that means that you must have expansion of leverage and debt to keep going.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. James Lavish breaks down the debt spiral, stagflation, and why Bitcoin wins. Let's dive in and uncover the truth.
S&P and Fitch had already downgraded them, over the last number of years, and then Moody's just sat on the sidelines. So what are we talking about? Well, the highest rating in debt is AAA.
Mm-hmm.
That's prime, right? And so the U.S. was always, it's the global reserve asset, right? The U.S. Treasury, and
you surely can't get better debt.
Surely you can't get better debt. Like, this is riskless. Like, this is supposedly the 10-year U.S. Treasury is supposed to be riskless.
Yeah,
that's the point. Well, then we had a couple of things happen, and one of them was a budget battle, and I believe it was S&P that downgraded them first, if I remember correctly, and.
Just S&P obviously is not the actual S&P. That's Standard
& Poor's. It's Standard & Poor's. It's the same company. It's just that this is a different, area, different division.
This is that, yeah.
So they downgraded not because they think that the U.S. is going to default and not pay the bonds. So this is where people get a little bit tripped up. AAA is like, there's no risk whatsoever that you're ever going to default, right? Then you've got AA, which is, it's like as close to AAA as you can be, obviously, but there's something there. Okay. So why would they downgrade the US if they're never going to default, really? And even when they did default because of this budget battle, it was back in, I want to go back and, I've got the newsletter here, so I don't want to quote the wrong time frame, but it was, 1979 is when they technically defaulted. So what happened? So they were in this budget battle, and back in 1979, everything was done by paper, right? So they're in this battle, and the congressmen are going back and forth. They're fighting about it. They didn't want to raise the debt ceiling. Finally, they get to a solution and they raise it, but it was at like the midnight hour, and it didn't give the Treasury enough time to stamp the envelopes and get them out the door with their interest payments. And so they tripped a payment, and they made it up really quickly. They made everybody whole, but technically they defaulted.
Bitcoin may be riding high above $100,000, but according to Safety and Amos, it's standing on very shaky ground. The author of the Bitcoin Standard believes we could be approaching the peak of this bull market, and that what follows may be brutal. Speaking on the Coin Stories podcast, Amos warned that Bitcoin is still capable of an 80% crash, just like in past cycles. Despite institutional adoption and corporate treasuries now backing BTC, he insists those involved must be prepared for a serious drawdown. Amos emphasized that previous bull markets have always ended with a dramatic fall, often within a year to 18 months after halving. While BTC could still climb to $200,000 or more, he reminded listeners that Bitcoin has already surged over 600% since the $15,000 lows, and that kind of run-up doesn't go unpunished. More companies are jumping on the Bitcoin bandwagon, like Blockchain Group in Paris, which just added $68 million worth of BTC to its holdings. But veterans like Max Keiser are skeptical that these newcomers have the grit to weather a deep bear market. Not every corporate strategy can mirror MicroStrategy's relentless buying through the dips. As the top nears, the real test will be who can actually hold when the plunge begins.
Lynn talks about all the time is like, if you're a sovereign that issues debt in your own currency, you would never default. You'll just print more currency and buy the debt to make sure that you're not defaulting.
Yeah.
And so, but the technical default is that you trip a payment and then you make everybody whole later, which is what happened in 79. So
no one you're actually not defaulting on the debt for anyone. That's just like the fact that it was politicking for too long. They decided to raise the debt ceiling too late and they missed a payment, then made it up.
Right.
Okay.
Right. And then back in 2011, it's the same kind of thing happened. That's when S&P, so it was Fitch who did it first and S&P did it.
Did what?
No, I'm sorry. S&P had downgraded the U.S. first.
In 2011, after the financial crisis.
And yes, in 2011. Then 2023 is when Fitch joined them.
Okay.
Yeah. But why does that matter? And why do you see that? So you see bond investors get worried about this. And how do you know that they're worried? Well, you see term premium. You see premiums that meaning that the debt trades at a higher yield than it normally would. Because you can calculate it out. The term premiums are somewhere around 80 basis points or 90 basis points right now for the 10-year. It should be higher, but we'll get to that in a second. But the reason that you have that is because investors are concerned about inflation, and just this deluge of debt, who's going to buy all of it, which means that they want to be compensated for that deluge of debt that's coming. We're seeing that people are a little bit worried about inflation, which gets us to stagflation. We can talk about that in a minute, but the people are concerned about that. Investors are concerned about that. And bond investors are like, they don't want to buy 10-year, 20-year, 30-year treasuries and have what happened back in 2022 all over again, where, interest rates go up, the bond is worth less, and they're sitting on this portfolio of marks that are, down 20, 30% again.
Yeah.
So how do they compensate themselves and protect themselves? Well, they demand a higher rate. And this is where the bond vigilantes come in. Bond vigilantes are the ones who are saying, no way. And it's not like a group of, it's just that investors are looking around. Yeah, they're looking around. They're saying, yeah, we need a higher rate here.
Yeah.
And they're not colluding, but they're recognizing each other like, yeah, I need a higher rate too.
Ethereum is heating up, and many analysts believe it's gearing up for a major breakout. Over the past 30 days, Ethereum's price has surged 46%, outperforming Bitcoin and catching the attention of traders and investors alike. Not only has the Ethereum/USD pair gained strong momentum, but the Ethereum/BTC ratio has also climbed by 30% in the same period, pointing to growing strength for Ethereum versus the king of crypto. What's driving this optimism? For starters, spot Ethereum ETF have seen 12 straight days of net inflows, a signal that institutional interest in Ethereum is growing fast. This influx of capital suggests that the big players are betting on Ethereum's long-term value. On top of that, technical charts show Ethereum trading above key support at $2,500, with analysts eyeing resistance near $2,850. Breaking through that could send Ethereum to new yearly highs and possibly toward an all-time high. Some believe Ethereum is repeating its historic pattern from 2016 to 17 or even mid-2021. If it holds this range, a rally to $6,000 may be on the table. With momentum building and the Ethereum/BTC ratio climbing, alt season might just be around the corner. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.